We're going to go over Schedule C of IRS Form 8995A. So that's IRS Form 8995A is the qualified business income deduction calculation form. Schedule C pertains to any taxpayers. They may be carrying forward business losses from prior years or any loss netting that's required. So we're going to go step by step in completing Schedule C. Not everyone will complete Schedule C if they don't need to. If you've never reported any losses for prior years, if you don't have a qualified business loss in the current year, you likely will not be completing Schedule C. So, but if Schedule C does apply, then you would need to complete Schedule C in its entirety before you start on Part 1 of the form itself. So this includes prior loss carryforwards or prior year loss carryforwards that generated a loss even if it wasn't reported or even if that business no longer exists. So Schedule C offsets any trade or business that generated a qualified business loss against the QBI from your other businesses. So that business loss has to be apportioned across all of your trades with QBI in proportion to that QBI. So what does that mean? It just means that this helps you balance out how the loss is spread throughout all of your businesses so that you're properly reporting the QBI for each business. So as we start Schedule C, you'll notice that you can put up to 3 trades, businesses, or aggregations on each Schedule C. If you have more than 3, then you can complete and attach as many Schedule Cs as you need. But once we get to line 2 through line 6, these are composites. So if you have more than one schedule, you're going to be entering the totals of all of the businesses, not just the one on the current Schedule C. So your tax software should automatically enter the information up here. So let's just say that John Doe we'll put 2 businesses here. Let's say he's got his Doe Medical Solutions, Doe Medical Real Estate. I'm trying to recreate the scenario that we had in the Schedule B. So the qualified business income or loss, we're going to play with these numbers a little bit and make them different from the Schedule B video. But let's just say that in the medical solutions, we had a business income of $100,000. For the real estate, we generated a loss of $50,000. And for the medical equipment, we made $50,000. And then the reduction for loss netting purposes. So basically, according to the instructions, what we're going to use in the column B field, we're going to apportion the amount from line 5 right here. So what we're going to do is take a look at the qualified business net loss carry forward from prior years. So we actually have to probably start with line 2. So according to the instructions, the line items for this schedule are computed out of order. First, we do column A, which is the qualified business income. Then we skip columns B and C, go to lines 2 through 5. And then once we have the information in items lines 2 through 5, we'll come back up and apportion them. So you're going to enter this information here. And then, so right now that's $100,000 of qualified business income. Let's just say that we had a $30,000 loss carry forward from prior years. On line 3, we're going to enter any amounts of the total businesses, aggregations, trades, income. The total of all of their losses. So we're going to combine the negative amounts on lines A column, or lines 1 column A, and then line 2. So we've got a $50,000 loss here. We've got an $80,000 loss here, or sorry, $30,000 loss. That gives us a total of $80,000 of losses. Now we're going to take the total of the income in on line 1 column A for all of these. So this is $100,000 plus $50,000. We would make that $150,000. And now we're going to net our losses with the income of other trades, businesses, or aggregations. So in parentheses on line 5, we're going to enter the smaller of the absolute value of either line 3 or line 4. The smaller happens to be that. And now we're going to subtract line 5 from line 3, which means we don't have a loss carry forward. That's how we would do that calculation. And then we would take this $80,000, go up to column B, and we would apportion that properly. So based on that, we're going to only apportion the line 5 amount amongst the businesses or the trades that have QBI. So this one right here, we would not add a loss because it's already generating a loss. And then we would take the so 2/3 of this $80,000 would go to offset the medical solutions income, and then the remaining 1/3 would go to this gently used medical practice leasing company. So again, the reason I came up with that was because the total amount of income reported is $150,000. This one consists of 2/3 of the income, so you would portion 2/3 of this loss that was reported here. So for simplicity's sake, I'm going to change this figure to $90,000 because it's easier to visualize 2/3 of $90,000 as $60,000. And then the remaining 1/3 would be $30,000. So the column C amount, we're simply going to subtract the difference and we get $40,000 here. We're going to combine column A and column B. We still get a $50,000. So there's $40,000 of income. Since this is a net loss, we're going to call that 0. And then this is qualified business income of $20,000. So we combine columns A and B, but for the lines where the business generated a net loss or has an overall negative loss after applying that to the QBI, instead of entering a negative number, we're going to enter 0. That's the amount of adjusted QBI income for that business. And then we've done that for the medical solutions, and then we've done that for the gently used medical equipment. So that's how we would enter that information. The amount on line 6, this carry forward, you would enter that for the next tax year on line 2 of Schedule C. So in this case, it's just going to be 0. So either you start off with Schedule C with 0, and then you calculate any present year losses, or if you don't have any losses from the present year and you don't have anything carry forward, then you don't need to complete Schedule C in the following year. And the final thing I want to point out is that you can also use this loss on IRS Form 8995, which is the simplified computation in the following year if you do qualify for some reason that doesn't require you to complete the 8995A version. And if you did report it on the simplified computation form, that's line 3 of 8995. So if you're putting this on the 8995A, that's on line 2. If it's on 8995, it's on line 3. And I think that is a wrap for Schedule C, our walkthrough here. So we are currently updating all of our content for IRS Form 8995A with the newest versions of the form and the schedules. So we're rolling out new videos and we're updating our article. And as we do this, we're going to make sure that we post updated links to all these resources on our channel and in the article. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions or comments, or if there's something that you'd like to see in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.